Hey, Andy, Steve, what's going on today?
Hey, thanks, Scott. Hello, Andy. What's up?
Hi, Steve. Hi, Scott. Hi, everybody.
Uh, Happy Tuesday. Got new air conditioning going, which is kind of nice. Makes it nice and easy to present when it's humid out and you haven't had air conditioning in so many years. So, anyway, let's get started here. Welcome to the Trade of the Week, the theme of the Tuesday afternoon webinars. As people trickle in, they know the drill. The first couple slides here, Trade of the Week disclaimer, just a quick reminder. We're not advisors, we're not brokers, we don't get paid to give advice, and we're not allowed to give advice. So anything you see or hear is just our opinion today. It's not financial advice. Because we're a software and a subscription content company, and we're not in the business of registered investment advisement. All right. The program is 14 years old. I mean, we've been doing it, Andy and I have been using it all of those 14 years, and we've seen a lot of changes come and go. And there's a lot of layers and a lot of things that, nuances that people might not be aware of. And so what I'm getting at is trade ideas is not something you can be taught or learn quickly, overnight, or even a 5-day test drive for that matter. A lot of you know we do a 5-day test drive every quarter for a $8 nominal fee. But the people that are serious about that, they realize that the 5 days they got is just not quite enough. So they go into, the next option, which would be a month to month, and they're always learning at these levels. So what we want to do is just remind people that we're here as often as we can be to make ourselves available to help the education process, whether it's Barry's live trading room here Monday through Friday, bell to bell. It's free, and it rivals a lot of pricey trade chat rooms out there, whatever you want to call them. And not only that, but Barry uses his time generously to offer tips or technical advice on how to use our program. So that's always turned on. It's always available to you. You can get into that room just by clicking into the main website for the free trading room. We have the afternoon webinars. I helped Jamie yesterday. Dan and Brad will talk tomorrow about what's coming down the road with Trade Ideas new versions. And then Andy will talk about his observations of the market on Thursday. Friday, we do not have afternoon webinars, especially in the summertime. People are out the door starting their weekend. But what we offer is a 3-hour live technical support, which basically means come and ask us questions if you're having difficulty creating a scan or understanding a certain filter, how to use it. That time that we set aside, all 4 of us show up, myself and Andy and Sean and Jamie, and we help people really kind of get the best out of the program. That's once a week, every Friday for 3 hours. So take advantage of that if you're not getting it. TI University on the next slide here is a recurring class. It's not a webinar, evergreen class, evergreen webinar, I mean to say, even though we do have a 4-part recording version of it for those that want to study over the weekend. But Monday through Thursday, every week, we start over with a live class with the basic stuff on Monday with Sean, and I do the basic intermediate stuff today. Andy will do some more intermediate stuff tomorrow, and Jamie will tackle the heavier lifting advanced stuff on 401 on Thursday. So there's that as well. So all those things combined, we really feel there's a lot to sign up, pull up a chair, and get help with our program, because we recognize it's a very powerful program, especially if you know how to use it and get what you're looking out of it. So speaking of getting out of the machine, requires some human touch. And so just a reminder going forward that it's not going to be a AI world where the machines take over everything. There's always going to be a need for human discretion. The machine and the AI is great at curating a list of ideas, but the human being is the one that takes it to the next step and executes the plan and the risk management. So just a reminder here with that slide every single week. So we'll get started now, and the kind of a recurring theme it's been lately for the Tuesday webinar, market cap. Got some thoughts on what's going on in the market recap myself. Andy has some observations as usual on the AI today and what happened over there. Certainly some directional bias and kind of a quiet day. Trade of the week, Roku, not exactly fun, but we'll talk about it. It is what it is. It triggered and rolled over on us, just probably about the worst possible case scenario, but it's going to happen. We'll revisit last week's, which cannot trigger, overlap into the market to recap on that IWM, and then check in with Xilinx as well. That one worked very well. So we'll get to that stuff. I also want to talk again about, kind of what's been working lately, and just dive back into back testing to verify my theory of what has been working lately, at least for me, and the data proves it. And then we'll visit last week's alerts with some comments. Tough week because there's a lot of consolidation, which I'll talk about in a second here. But I've got 6 or 7 new ideas to set, of course, to give out at the end of the webinar. So we'll get started here. So starting with, I'm going to start with silver. I just want to, because I don't want to forget this. I was discussing this, I think on Friday last week, I can't recall, but, I talk an awful lot, guys, about that 10-period momentum line. What does that 10-period SMA do? It guides and gauges momentum. As long as it kicks the price back up above, momentum is still intact. If it closes below, like Roku did, we'll get to that, then all of a sudden we have to ask ourselves, is momentum ceasing? But what it also tells us sometimes is when things get way too far ahead of themselves. Look at all this space here. A lot of space going on there. I don't know what that is. It's just a doodle. But there's a lot going on here. And this thing is just begging for some sort of a breath to come back and fill this gap, maybe meet this rising 10-period moving average and consolidate and then move higher. So, if you've been watching silver and feeling like you missed the boat, I don't think there's anything going on here for at least a few days until that silver wants to settle in. The same thing goes for the silver miner pause, Pan American Silver Corp. Don't be this buyer up here. Look at all this space. Whenever you have this much space between the current price action and the rising momentum line, it's saying, hold on, man, I can't even catch up with you. Give me a minute. This is not a period to be buying anything. And likewise, conversely, it's probably not a great idea to be shorting anyway either. I mean, if you want to be tricky and if you're really fast and adept and you're staring at the market all day long and you want to do stuff like that, go for it. There might be a day of slippery slope in here where we come back down and again meet the rising 10-period moving average and do a little consolidating for another move higher. So I just wanted to point that out, that the silver and gold has been literally on fire lately. Let's just check in with gold. Gold is not the same as silver. So silver is basically playing catch up, which was kind of the theory we were talking about the last couple of weeks. Gold got a big move before silver. So let's get to the market, the stocks, the S&P. I'm calling this really just kind of consolidation. I will add on Friday, going into the trade of the week, we had a lot of candles that looked like this, big nasty reversal candles from top to bottom, red, not much of a wick, just a big red body across the board. We saw that in a lot of stock individual names. And honestly, it kind of caught our attention. But this market is resourceful, it is resilient. It found a way to possibly, as we look back here, put in yet another higher low and dig in to keep the current mini trend moving. And it's not much of a mini trend, it's actually all-time highs back here at the high end of this little blue strip, which Trade Ideas Technology has drawn in for us. So after today, yesterday's data, when I was helping Jamie, was a bit, more suspect. We kind of waited to have to see, what we, let me try that. There we go, looked a bit more like that, but after we have today's data, a nice big pop up, and now we're back above this 10-period again after a little bit of slop back here. And it really looks like it's a foregone conclusion. We're gonna come back and probably test this all-time high here, probably tomorrow, more than likely. But there's, again, no bear case to be made. Again, a little bit of a goofy candle on Friday, but one candle, a great example of how one candle does not give us the ability to create a thesis or a theory on what could happen. We want to wait and get more data, and the data that's showing up here is basically giving us the concept of we are in consolidation. And back to our range last week, this orange line is very significant in the fact that it portrays the prior all-time high back here. So we came back, and I believe we tested it on this day proper right here. We don't want to come back and take out this low here. If we do take out this low, then we're just getting back to kind of congested price action, but I don't think that's where we're headed. I think the moving averages are going to stay fanned out, the 10 above the 20, the 20 above the 50, above the 200, and the price action is just free to go, however it wants in whatever fashion. So that's the S&P, no bear case to be had. The NASDAQ, pretty much the same thing with even that big tail and the strong close. It looks like the NASDAQ has a date with its all-time highs again tomorrow, more than likely. This consolidation again on Friday, big red candle, but in the bigger scheme of things, 5-6 days, it's just consolidation and noise. And now it looks like we're ready to push higher. The Dow The DIA has always been a real pretty chart. What I mean by that is it's been adhering to the moving average. The Dow wants nothing to do with closing below its momentum line, the 10-period moving average, which is in itself very impressive. And that's all-time highs again, I believe. Let's double check. Yep, all-time highs there in the Dow, so that's looking real pretty as well, which brings us once again every week to the failed, I shouldn't even say failed, to the non-triggered trade of the week. Last week, IWM, the thought being how nice this market looks, it's got to be just a matter of time before the value investors come in here and try and drag this IWM higher by buying a lot of small caps, because there's a lot of space here with respect to the other three ETFs that we just looked at, the NASDAQ and Dow and S&P. So I keep waiting for that moment to happen. It doesn't seem like it wants to happen, and Andy brought up a good point. And if it doesn't happen, well, then maybe this thing just starts to, put a damper and a weight on the bigger stuff. I don't know, but this is the one thing that's not lining up. Everything else seems to be lining up really well, except for this dang, IWM. For some reason, the Russell 2000, the small cap stocks are not in play. They're not in favor. But I'll end with this. If they do become in favor, and you happen to notice one day that IWM is leading the pack, and we have a giant green candle screaming with big volume, just throw all your other scans away and focus on nothing but small caps that day, because it's almost like we get these days every now and then when the when the small caps pop. It's like you almost can't go wrong, because there's a feeding frenzy of value, and everybody's trying to find the next big cool next big small cap, and you get a lot of good consistent winners on those days, but I don't know if that day is going to come. We'll see. You know what I'm talking about, right, Andy? Those small cap days when things are popping like popcorn out there.
Yeah, and it's really unusual to see what we're seeing right now. It's like an anomaly, and I just wonder. I was reading an article, about how like 60%, maybe even higher, I can't remember what it was, of all the trading that goes on is basically, or investing is just passive investing. And I just wonder, if all these mutual funds, these ETFs that are designed are just right now, for some reason, IWM is not in favor. I don't know if just all the fund managers are just putting their money in all the big caps, and but yeah, this is looking. You're cruising through them right now, and that's just crazy. And remember last year about I can't remember exactly when it was, where IWM was leading the way. It was, but I don't know, Steve.
It was leading the way down. Is that what you were? Yeah, it was leading the way down. It was this period right here.
But if you go back to about a year ago or so, you will see that that IWM was actually leading.
Let's see, let's superimpose here. Yep.
Yeah. See that?
Interesting.
So I don't know. It's quirky, and I can't figure it out. But I just wonder if it has anything to do with all these.
It's an observation at the moment.
Passive funds and ETFs out there.
Yep. Averages, before I give it back to Andy, let's see. Gentle, it looks like the averages I have, but I want to use a better chart. I like to use the 10 period, the 20 period, and the 50 period, and the 200. The one that's most interesting to me is the 10 and the 20. If the 10 fails sometimes, the 20 might be there as a backstop, which it kind of was sloppily in this area. But the 200 is, bigger picture kind of stuff. If you're looking at momentum and short-term trading, we just want to make sure these stocks stay above their 10-period moving average.
Mm-hmm.
Much like the GDX has done back in here. It's confirming, a little bit of slop at the backstop of the 20, and then back to sideways. This is my favorite setup right here, the sideways action with that moving average, boom, and then it shows you it has a lot of power coming out of those types of setups right there.
Sure it does.
Moving average question, 10, 20, and 50. So you want to take it over there, Andy, and
all right,
talk about
I'll grab
AI
it
today?
Sure will. A friend talks about CMG and Snap.
Snap post earnings, yeah.
Yeah, and just pull it up real quick before we go into Holly, because it's weird, because I noticed when about 4 or 5 months ago, no, actually longer than that. It was when it was down here. My daughter, who's going into high school this year, she's always on Snapchat. And I go, do you guys use Twitter? No, pretty much everybody uses Snapchat. And I'm going like, geez. you know, there's got to be some value here. You know, this thing just look at the, you know, how it plummeted after, you know, the IPO. Well, it just goes to show you sometimes, man, if you listen to people that's in that market at all times, and yeah, that's all they use. And lo and behold, I should have listened to her and bought it. I didn't, but anyway.
You're like the Peter Lynch daddy.
Exactly. Hey, guess what, Steve? A few months ago, she bought a pair of Crocs. And you know, yeah, those ugly shoes. And once again, you know, I said, well, your friends? Oh yeah. She goes, a lot of people are buying Crocs. They're cool now. So I'm like, so it's strike two for daddy, not listening to. But anyway, that one still may have some room for sure. Snap, as far as that goes, Snap may too after earnings today. But you know, a lot of times, man, you can listen to, you know, kids, man, get some good investment advice. All right. Let's turn our attention to the Holly AI. And what I've done here, I got all the positions up today. And let's take a look at the market and what we're looking at. Because, you know, market, nothing crazy, just finished up, you know, 0.6%. If you looked at it in just the intraday, you look like, wow, that's a big move. You know, full risk or risk on should have killed it, but not really. I mean, up until this point when the news came out about negotiations between China and the US, not a whole lot of stuff was working. Of course, some of the earnings plays were, but the overall, you know, market seemed like only the earnings were moving. It was pretty sloppy in the stuff I was looking at. And, you know, I looked at a lot of Holly, you know, calls not going anywhere. So I think it's a discount when you get this far into the market and you get this little, because even her positions, even though some of the full risk turned and did better, it wasn't anything crazy like you've seen in the past, where, you know, you may be up $700, $800 over here in one of the segments. And I noticed that on some of the stuff we were watching and trading as well. But nonetheless, it's the market, and this is what Holly had to go with. And honestly, guys, I think Holly did a great job today. I mean, and here's one reason my best way to gauge Holly is by risk off. Honestly, you know, there's days where the market, you know, may open up flat, slightly open, and just takes off and has, it seems like there are few and far between anymore, but, and then full risk will have a banner day. But I don't want to say that's easy, because there's nothing easy ever about trading, but it's days like today when you get the gap up and the slop around and pretty much teetering near lows, you know, for a good portion of the day. And I look over here at risk off, and these are all the trades today, all 20 of them. And you really only had 5 trades out of these 20s that finished negative, and 2 of those were $4 or less. So really impactful negative trades today, as far as I'm concerned, were, you know, just 3 of them, and really $25. When you look at the ones positive, you had, you know, probably, well, about a dozen, I guess. Maybe if you take away the smaller ones, you still had about, you know, 9 or 10. That's what you like to see in any sort of strategic system that you might have. I can easily, I mean, I'm not the type of person that say, let's take up this HOTH, for HOTH, for example. I mean, Holly got out for a risk on, this is based on 200 max risk, okay? So you can see the shares bought here, $133. Well, you can see this thing, you know, went up, came back down through the stop, and then moved higher. So I'm not going to say something like this, you should hold on to it and get the $314, but nice little trade. Boy, now that I look at it, I'm trying to see where is that a quick exit, Steve? Yeah, it looks like a, yeah.
I didn't look at that.
I look at that chart, I'm going like, gosh, where was that? Must have been, yeah, I'm trying to see where the, it looks like a, gosh, about a 16-minute hold. Later I'll break this down into a 5-minute chart, see if I can pick that up better, because it doesn't look like there was that much opportunity to the upside. AUDC, you know, another one. You had an entry here, you know, quick little up move and then back. Holly exits right here for, you know, a decent little profit and then rolls over. I've seen a lot of this today. You can see the top 3 there. The top 3 winning positions and risk off all went down to the stop at one point. when you start seeing action like that, guys, it's a good indication that you're in the summer months. Things are very low volume and volatile. So, just be careful because these things are moving sometimes pretty quickly. APPN, it's another one where $99, you could have held on longer and made this. This one really never even, it's a no pain trade. In other words, it never even got back through the buy signal, which is one that you could have maybe peeled off half. But Steve, all in all, not a bad day by Holly, but just it's not one of those banner days where there was a great trade. And now that I look at this one, that's pretty darn good though. Man, that was
Sure was. As a matter of fact, I was giving that one as an example in a 201 webinar today. Holly definitely left a lot of meat on the bone there.
Yeah. She took
and when you look 19, at that daily chart, I'm sorry to interrupt. When you look at that daily chart, that's when you got to kind of override her and say, oh, geez, that's a breakout chart. I think you might be a little bit too soon there, Holly.
Exactly. You could look at it right here. Getting out where the shades kind of change right there. That's the exit, and look at that. Yeah, that she was just almost like a breakthrough highs.
Let me add to that thought. It's that sideways action that I loved on the daily chart. Well, it shows up there on the intraday chart too. The sideways action with the moving average 10 period coming up to catch it. In other words, she got out. Here's the big takeaway. She got out before there was a resolution of that intersection. Right. I would want to stick around and see what that resolution is going to look like. So I'm not playing hindsight Harry here. That's exactly what I'd be doing in that time frame.
Absolutely. But also look at her exit reason. It's a timed exit. Okay, all of her strategies are set with timed exit. So she didn't get out on a profit save. She got out because she was timed to get out.
Statistically, it back tested that well. Yes, exactly.
Yes. So that was one. Look at that, man. Basically, not even a bar reversal for, about 3-4 hours.
It was about 4 hours of momentum until it wasn't anymore.
Take a look at this ACHN here. This is one where. Let's see, exit price. Okay, this is what she got out for a flat. She got out for a flat and went below, and then it came back at the close, I guess, with the market and got a little bit higher. So, no, I wouldn't blame anybody for getting out there. I mean, otherwise you're underwater for a couple of hours before it even comes back. But nonetheless, if you're playing Holly and you're doing it in risk-off mode, in other words, you're taking the exits that she took, you fared well today. I mean, you didn't, bring home a whole lot of bacon, but nonetheless, it was a positive day for you. So that's about it, Steve.
All right, cool.
Nothing earth-shattering.
Yeah, nothing. Definitely, a decent directional bias. Don't see a whole lot of shorts in there. Certainly not enough to make me want to go short, but I always like to pay attention to the ratio of longs to shorts, etc.
Yep. Yeah, thank you for you brought that up at the open, so I didn't really talk about that, but go ahead.
All right, so let's see here. All right, so eyes back on my screen. I'm going to talk about Roku. This is about as dumb as it can get. It just doesn't tell the story on the daily there. But what I will tell is what we had going in. Okay, so there we go. That's what we had on Friday. All right, so Roku adhering to the nice moving average rule right there. Got the 10 above the 20, above the 50. Everything's looking pretty golden in this area. Moving average right there. Would like to lean and trust on that, so we see what happens next. The next day was Monday. Yesterday, a little bit of a test, bounced back up with some green candle. I'm gonna zoom in a little bit more because yesterday, boy, this thing looked really good yesterday. That looked about as good as it can get. And honestly, I know Waleed's gonna know where I'm gonna go with this. I wanted to draw a little bit of a commentary on this. When the emails go out from Monday, this we didn't have this candle right here, and so when I like to look at wedge breaks, which is kind of a flag break, which is essentially kind of what this is here. I don't like to wait for the prior new highs. I want to take advantage of as much of this as possible. And so typically on those types of entries, I like to look back 2 days, not the close of yesterday, but what was the close the day before that. So looking at yesterday's candle here, and again, this is the close of, or this is what it looked like yesterday before the close. Our signal candle is actually this one right here. But coming into today, that signal candle, you could have lowered it a little bit, and that's the way I would play it rather than waiting for this one. I like to get the current candle out of the way and then take out the candle a day prior, if that makes sense. Well, everything looked really good coming into today. It triggered. I tried to day trade it. It blew me out. It was just kind of a real pisser. So what it did was, we can take a look now on the intraday chart. It was this is about as nasty as you can get, guys. I hate price action like this. It's just not right, but it happens. So this was our actual. That was our actual entry right there, going back to that high of a few days ago. And look at how close it was. We ticked through about 30 seconds, about 20 cents, reversed. It went up and down for a while. I really thought I had a chance to go, and then just popped down. Well, I said, okay, more than likely it's going to come down here and tickle yesterday's low and then bounce. I really thought this might be a intraday level to bounce, which would have bounced us right off this, intraday moving average, which would have made perfect sense. But the thing just kept pile driving, just kept going lower, it just kept disappointing for the remainder of the day, which brings us to the fact that yes, it triggered, and yes, as far as our risk management goes, we had to deal with one of those horrible decision processes where we start looking with an hour left to go in the day, all right, and we got a big giant red candle down here close to lows, and the only real pray we can have is the only chance we have is to pray for a giant bounce back into the close, where we can look on hindsight on these charts that we look at all the time, and we see in hindsight how it really tried to shake people out, but God, it regained and closed back above that simple moving average. And so that's why I often say the closing, the downside risk management should be to not let a daily candle close. Well, I know where some people are thinking, probably like, well, with an hour to go, Steve, how am I going to know if the dang thing's going to close under the moving average or not? The thing's on low here. I'm in pain. I don't want it to go any lower, but I also don't want to miss out on a possible bounce, and I don't really have an answer for you there. It becomes discretion. Maybe you get out a half and watch for a bounce or whatever, but that's where you have to kind of get creative. But I fully understand, and I was fully in the same pain, that it's no fun when you got an hour to go and we're trying to keep the price above this moving average up here, and it looks like it's not going to make it. And so you have to decide when and if you want to cut it. My rules say, and I cut it, is just to get out. It broke the line of momentum. It went from looking extremely good yesterday. This was about as good as it could look. I loved it, but it's not always going to work out the way we want. Price action is going to do what it does, and all we can do is just base our current decisions on the current price action, and that's where we are. So there's that. You want to add something? Go ahead.
Oh yeah, I just want to say, guys, and what Steve's talking about there, that's the way he trades, and that's kind of like the way I trade too. I look for the move. Okay, I'm looking probably in most cases a 2 or 3 day move, and if it doesn't do what I expect it to do, in most cases I do get out, unless for some reason I have a small size, maybe a starter position. But the point I'm making is when it comes to exits, it's obviously subjective. You're based upon your risk tolerance and your time frame. Okay, if you're playing this maybe with a 3 or 4% stop and you're looking for maybe a 8 to 10% gain, maybe you could stomach it, but it's like a lot of swing trades, guys, and there's so much subjectivity involved because of the risk tolerance, the size of the trade, how long you want to hold the trade. So he gives, and we always give ideas of where you might want to cut this or where you might want to take profits. But hey, it gets back to the personal trader.
110 down to, that was a 7-point drop. That's nasty. That's a 5.5-6% intraday drop, and I don't expect people to sit around and stomach that kind of stuff. You got to just cut it and move on.
Yep.
So that being said, Xilinx from 3 weeks ago, doing great, but I've got some thoughts on this one as well. I mean, same type of entry, right, Wally? We talked about even adjusting that stop, that entry trigger even 1 day forward as this thing started to line up. Well, in this case, it worked, and we got a little extra gravy because of that early entry. But now what I want to highlight is it's time to think about getting out. I mean, we bought on the low end of that channel down here in this rough area. Well, it's time to start thinking about the price is getting back to the high end of this channel, and this is where you want to start thinking about taking your profits. So I mean, unless you know the CEO and you think this company is just going to be golden and it's going to send your kids to college, that's a different story. But we're just trying to time the jump rope. And we were looking at a nice price action that got ahead of itself, came back, settled in, built a nice higher low base. We've had 10 days of nice action. It's time to start taking profits if somebody's still in this one. So I just wanted to highlight that as well. It's certainly easier to talk about Xilinx that we had called after a nasty one like Roku. And then lastly, last week, of course, IWM has given us nothing. And as far as I'm concerned, it's kind of off the table now. It didn't set up. It never triggered. And what it's done is it's given us this extra 5 days of garbage here that we don't want. Well, it looked a heck of a lot better back there, you know. It was above its moving averages. Now it's back to garbage and slop. Moving averages are, I don't know what's going to happen here, but it's got my attention, and that's about the best I could say. So that's the trade of the week portion. We'll try and find another good trade of the week this weekend. But God, I'll tell you, you know, on Friday there were just a lot of ugly candles out there. I just didn't really trust a whole lot. I mean, there was just a lot of this going around everywhere you looked. Some really bad on individual names, even worse. But this market is a fighter. It's resilient. We can say that.
It's crazy action. Just look at ENPH today. You know, one's been in the A table for a while. I mean, look at that. Just
the pile drive went a lot lower.
Worth of freaking lows, man.
Yeah, which is kind of a good segue to where I want to go next. So, you know, Andy and I have been dabbling a little bit with day trading to test an account with a live account to make it you know, worth our while and interesting and learn some things and whatnot, what you do in a testing account. And the only thing I feel comfortable day trading, because I don't really like day trading anymore, is playing with this. This was the last one to come through today. This is Andy's I'll Take That. I know I've talked about it the last couple of weeks. We even we're going to back test it again. But here's the simple idea is I have configured this one to only show me not early morning, I should correct that, show me fast, quick drops with at least a 1% drop. And ideally, I want a nice big drop down here close to the change from the 8-day SMA, which will line up a lot of times with the 10-day. So what we're trying to do is find strong stocks. Here's my stock composite rating, 80. So these are B students all the way up to 100, B and A students, meaning decent charts. So starting with decent charts, trying to find and use this event to find the moment they're shaking people out, trying to bid back in and drive the price higher. Well, earnings on ENPH. Let's take a look at that real quick before
It says 5 days. I'm not sure.
I have to go take a look. So in hindsight, this SMPL, look at that arrow. It nailed that bottom perfectly on the daily chart. Let's take a look over here. It's exactly what we're scanning for, guys, this kind of stuff. So a big drive down to our daily simple moving average that we talk all about. And look at that, like clockwork. It triggered and the price bounced from that point because the bigger picture is the path of least resistance is higher. We're trying to find these moments of pullback. And this alert helps us do that. And it's really the only way I think that can be give somebody a chance to try and make money day trading. There's a few methods, I'm sure, but this is the only method I'm comfortable playing, is a complete reversion, contrary. Bigger picture is good, but in the moment, trying to find where somebody's panicking or maybe getting stopped out and using that. So what I'm also doing is I'm not just always using this, all right? I am also using my A table. So these are all the stocks that have 85 or 86 better scores. These are really good. There's some in here that we're going to mark up today. And there's two different ways in which we can trade these. Look at there's the sideways and the boom. There it goes. There's a great example right there. There's two different ways we can trade these. If I can find a good example. Okay, here's an example right here. We can wait for something like coup to maybe break out of this prior high back here and call this our entry, and then maybe get upset when it doesn't really run that far, which is okay. Or we can start looking for intraday drive downs where it does kind of come back down and hit this price average, moving average. Those can sometimes be interesting entries. Well, look at this coup all day long. It held that level, and the market makers released. This thing might have a little bit of a move higher tomorrow. It's possible, but what I'm getting at is I'm focusing using my my liked symbols, and each day, you know, I might have a few items of interest on this list that I see. And if I see something with my own eye come back and touch a moving average, like, here's a perfect example right here. It didn't trigger on the I'll take that, thank you, but it did exactly what we're looking for. There would be the entry right there roughly. And on the daily chart, that corresponds to right there. I got to get rid of my, here we go. Came right back down, bounced like a trampoline right off that moving average. So we're trying to find strong stocks in the big picture and then possibly use them as an entry. Now, at the end of this, I'm going to give out some more swing trade ideas, but they're all going to be based on breakout. But let's go back and again consider the possibility of, if we're watching a lot of these things closely throughout the day and we see something like ZS drive down here in the open, kiss that moving average on the daily, and then all of a sudden start to lift, these can be really no pain entries if you're paying attention and you get them the way you want. So just a thought kind of on the day trade mentality. And you can also use these for swing trade, but you're asking a bit more of chess moves with swing trade, just buying them on the low end of the trend. They're not breaking out. So two different ways to kind of play a lot of these symbols that we see. We'll mark some up at the end, but they're going to be breakout momentum type plays, and we hope that they follow through. And we'll see when we get to the ones I set last week. We're going to see how quickly they can die after they break out if there's no follow through in the stock or the general market. So last week we back tested this guy, and we're not back testing for day trading. We're back testing for a 2 or 3 day hold. All right, and I'm just going to open this up so we can do the traditional optimization exit. Let's do at market close tomorrow plus 1 day, I think was the one we did last time, day after tomorrow. We can always come back and change that. Risk management, risking 2% to make 8%, so risking 1 to make 4. Advanced, I'm only gonna go back 44 days because that's kind of, I wanna just kind of see how because we've been sampling this for about 3 weeks now, so I just wanna take a big chunk of it, not the entire bit of it, but this is the portion that's been working and see how it looks. All right, so we'll simulate buy, and then we'll have our baseline. We'll be able to adjust a couple of things and just kind of confirm that everything I just said 5 minutes ago should still be working from a statistical standpoint based on what we're going to look at here, especially for swing trade entries. Because there's, again, 2 ways we can enter these swings. We can wait for them to break out and clear resistance. Or we can try and get a little tricky here and do what we're doing with this back test and grab them in a contrarian fashion. When they're selling, we're looking to buy. So our starting point is 69 trades over 45 days. Let's almost a profit factor of 2. Not quite there. Average winner 80 cents, average loser 60. I'll let Andy talk more about that in a minute when we optimize. But the first thing we'll optimize is price. I think it's already been optimized. Okay, I didn't change that, so we'll leave that as is. It just seems like things over $100 don't work as well. The time of day, I know there's going to be something in here. Let's go to 15-minute intervals for time of day. Right off the bat, boy, there's a couple of nice ones on. There's a nice one on the open, but there's a lot of bad ones too. So I'm really, gosh, this one just kind of changed on me here a little bit.
Yeah, I think if you eliminate it, you get the count so far down. I mean, if you took out those top fours.
Which one?
If you took out the top 4 time slots right there, you would eliminate this thing down to, just a handful of trades.
Right.
Yeah, I don't know if you want to do that.
I don't know if I want to do that either. I want to try something again. I want to try what happens if we run it, simulate buy and hold. Oops, no. Run it for a little longer strategy. Let's just see. Market close plus 2. I'm not trying to get too tricky with it. I'm just trying to really confirm that the line is going from lower left to upper right, and there's no real major hiccups in here. All right, so it's still pretty much the same thing. Time of days. That one's a little better.
Mm-hmm.
Yeah, wow, that one's, but that big red period in the middle. I'm not getting too much takeaway from all this, quite honestly. But before I did go, I wanted to maybe have Andy talk about what he thinks is really important because there's a lot of data points in here, and he has some good thoughts on which ones not to get hung up on and which ones you do want to focus on. You know what I'm talking about, right?
Yeah. I think The main things I like to look at, obviously, is the equity curve. You definitely want to, make sure, like Steve was saying, goes from lower left to upper right there. You'd like to get it as smooth as possible, but without too many drawdowns. That's not too bad. That will sometimes happen when you have a lower count. But the biggest things probably are the profit factor. Okay, in the summary page there, the profit factor, and all basically that is total profits divided by total losses. Now, the one caveat with ours is we do not factor in commissions. So like to try to get this thing as above 2 because you're not factoring in commissions, so you kind of got to do that. Now we show it for you in the equity curve there. You can see where commissions are factored in, so that's a nice little feature. But just keep in mind that a true profit factors in commissions, and unfortunately ours don't. A lot of people get caught up on winning percentage, and what's more important than winning percentage is your average winner versus your average loser. You can have a winning percentage of 45%. I think, as a matter of fact, I think our last publication that we released from Holly, the winning percentage was only 46%, but the numbers were incredible because the average winner was far greater than the average loser. So those are the things I like to keep an eye out on, for sure.
Also, distribution, not have one day here, this one big spiky day. It looks, we got some green days and we got some red days, so it was a good distribution of the plots of the trades.
For sure.
And of course, you can always come in and click on one of the good days or bad days and see the actual trade. So we can double click and look at AP. So that was our day there, day plus a couple. There's this one, Bison, didn't go anywhere, it looks like. That one didn't do much either. But for the most, this one had a little bit of movement. So you can click into the calendar and the heat map there and see each day of what the trades were. And that's about it. I think the most important thing Andy was correct is this average winner, average loser is so much more important than average win percent. And then also you also want to take a look at how many number of trades. 69 over 45 days is pretty decent. That's not bad at all. You don't want to have 500 trades in the course of 40 days. That's going to be a bit unrealistic as well. So what this tells me is that I'm going to keep this thing on my board. The last one that came through today, there were a couple duds as well, but the last one that came through, it kind of did exactly what I would hope. So keeping an eye on that. And now that we've got Holly down to one segment, and again, I don't mean to tease you guys, it'll be coming in the next release. This is a developer's version. We are able now to segment the AI and compress them all into one window, so that freed up some nice desktop space for me to keep more of the stuff I like to look at. Oh, you do have it. Okay, good. Waleed's on top of it. Beta is out. Did not know that. Good to know. So if anybody wants to go to single Holly view, meaning all the trades, all the strategies are now visible in one window. You can sort from top to bottom. Float on, never had a trade today, but it would have been interesting if it did because it tested at 71%, 3.92 profit factor. Would have been interesting to see what happened there. And then these ones down below, these barely made the cut, but it's nice to be able to put all of the data back into one simple window. All right, so let's just check in on the alerts that were set last week. And again, I think the theme we're going to see is there was a little bit of meat on the bone, but not for very long. It's just a perfect example of you can't really stay in some of these things as long as you'd like to sometimes. So I think I'll double click by percent. So do the best. SEDG, our green line back here, it broke, it gave us a couple days and then faltered today. Oh, look, ZS, we just talked about that one that was on last week, and it's going to be on this week's too. We're going to keep this one in play. But let's go back to that for a second. ZS did that nasty thing that we hate. Went through, triggered, and then reversed.
Seeing a lot of that lately.
But frustrates the day traders. Swing traders don't care. They're just watching the price. In other words, if they weren't going to be putting their swing trade stop down here, 2 days later, it doesn't look quite as bad. And as I said, we're going to set that one up. But a lot of stops and starts. This one just basically sideways since it triggered. AYX triggered, pulled back the next day, went forward, thrusted big time, then reversed that. So a lot of volatility. this one triggered. So I think the theme of last week is we had a lot trigger and they didn't really go very far, which is kind of a bummer. But we're going to go ahead and delete those. And we've got some new ones. I'm going to start with the one that I got here from Washout Bounce. I like the way this looks. It looks kind of interesting. I loved it. I didn't have earnings for 7 days, so we're good there. Classic opening range downward push. Filled the gap in here perfectly for the most part and gave us a really nice recovery on the close, which is what you want to see. Corresponds perfectly with the daily moving average there and a nice bottoming tail. Seems like it flipped the switch, filled the gap, and might be ready to go. So we're going to mark this one up. And I'm actually going to mark this one up kind of intraday here. I'm going to use that level right there. I'm going to eyeball it. All right, there's our first one. The next 6 are going to come from the A team here, A table, A team. The first one is, I love it when a plan comes together. Look at this one. This one is just begging to get above this level. It's been denied a bunch of times. So I'm going to take the actual true high here, 83 cents. And they'll create a price alert at 83. What's the score on this one? I'll see in a minute. I think it's pretty good, 94. So this thing is at or near all-time highs. You don't want to be messing around short something like that. The next one is going to be pod. Open the pod doors, Hal. Sorry, Dave, I cannot do that. This one I'm starting to see kind of a wedge break again to a wedge. That's what I'm kind of seeing here. So I'm going to go back just a couple days, not the all-time high, but what was today looking like? I'm going to use that high right there. 123.55. And next is ZS, the one we had marked up before, but it's resetting, and we'll take it again. It's like the, again, look at how they opened it up, tried to draw people in, blew them out, and then closed it semi-strong. Again, not looking bad at all. We're going to use a head start. We use this candle right here, 51. Second week, try. REG, and I believe this one is pharmaceutical, isn't it? So I'm gonna make, no, it's not. That's not the one I want. REGN. It should be on here. Oh, RGE, and I did REGN.
Easy to do. I do it all the time.
Biological product, manufacturing. Okay, it's not a biotech, so no harm there. Just kind of looking for a reason to break, and I'm going to use all-time highs here. Now, this could be one where if you watch tomorrow and it dips down and touches that moving average and bounces back up midday, that could be an entry on something like this. But I'm going to wait, again, like I said, for breakouts, and we'll see what we get. 72 cents is the alert. All right, 2 more. NVTA is one that's on that list. Big bump higher, 2 days worth of movement, sideways action, sideways action. Maybe it's going to do another day of sideways action, but at some point I think it's going to try and clear these levels, and I like what I see there. 94, 96, so we'll go to 97. All right, and then the last one is going to be QTNT. Perfect example, guys. Okay, I have a thought about this one. Sideways action, we got a little bit of space, it got ahead of ourselves. 1, 2, 3, 4, 5, 6 days of sideways action, and look what happened today. I'm going to count this as day 1, and a lot of times these breakouts only have a day and a half or 2 days, so I'm going to put a note in this one. We're going to just look for a quick bit of follow through and then get out at 1087. Okay, so here's the note. Already broke out. Look for less than 1 day follow through. I just wouldn't stick around too long in these things. You know, maybe a full day or half a day, but just be ready to make this one a quick one because sometimes you only get a day and a half or 2 days of nice follow through. So here's the ideas this week. Again, I hope the other context made sense of how you can also look to buy these things on the drive downs if you're paying attention to them. Share, 7 selected. All right, so I'm going to drop these in the chat window. Price alerts, cloud link. All right, we caught up on our questions and all that. Looks like it.
Yep.
Is Zeal a stock name somebody wanted to look at before we bring Scott in? I'm not sure. If it is, no, it's not. It can't be. I think it looks like Morse code. Stay away from that. All right, well, thanks for the comments. I'll go ahead and I'll bring in the slideshow back up and I'll say hello to Scott. He's got some announcements on the way out.
Yeah, thanks. A couple items. We release a podcast just about every week, so be ready for that by searching for Trade Ideas Podcast wherever you listen to your podcasts and add us as a subscription. You can check out the back issues for some interviews. We've got some good ones in there if you scroll through the older episodes. There's a new series of ebooks, 2 chapters each, 3 books. Go to trade-ideas.com/setup to get them all. They've got each book is arranged by topic. So there's one about swing trading, one about active investing, one about range breaks and pullbacks, and each one has 2 chapters on those subjects. They're free, so check them out, trade-ideas.com/setup. Both Steve and Andy contributed chapters, so if you enjoy the webinars, you should enjoy those books. There's a code that's good till the end of the month, so you've got about another week to use it. July highs, all caps. Just plug it in when you're going to do a new subscription upgrade or purchase Brokerage Plus and save 15% off the first month or year of any subscription or your upgrade. Any questions, email info@trade-ideas.com. You can follow Steve on Twitter @TodayTrader. Also follow the @TradeIdeas account. Facebook.com/TradeIdeasPro is the Facebook handle to follow and like and share stuff. Thanks, everyone. We'll have the recording up later on tonight or tomorrow. Take care.
See you next week.
Thanks, everybody. I'll see you Thursday.